Welcome back, folks. Dow's up 423, Nasdaq's up 198, S&Ps are up 50. Let's go over to our man, Mr. Teddy Kekstadt, as we do every Wednesday at 40 past the hour. You can check out Teddy every trading day, folks, at forex-trading-unlock.com. That's forex-trading-unlock.com. That is your key to online Forex trading. Teddy Kekstadt, what's going on, brother?
Oh, not too much. It's a quiet day in the FX market today.
It's a quiet day. Well, that's unusual, isn't it?
It's very unusual since we haven't had one in months, right?
Yes.
You know, so we've had some nice follow through. Remember last week we were talking about as the close of that day, we hopefully get some signals. We got a bunch of signals last week, excuse me, and it definitely helped to give a little lift to the dollar. But like I was saying last week, remember I was saying I think we're starting to settle into a consolidation range with the major currency crosses.
Yes.
And I think that's what we're hitting into right now is that yesterday we were still strong with the dollar, but not much follow through. I think we might still get another gush sometime between now and into the end of the week, a little bit, you know, but not much more. And most of the targets have already been hit from the signals that we had in some of the currency crosses.
Okay.
The US dollar Swiss and the Euro US dollar are right just short of their targets. And the thing is that these targets are coming right where you have previous swing high and swing lows, that if we take those out, those would reinforce the direction that it's currently going in. And I don't think that we're going to get that kind of follow through right now. I think that we're going to start to reach a range of containment for the major currencies. Not when we're talking like the lesser ones like the Brazilian real or the Turkish lira, which once again made another high today.
I know.
You know, I mean, those countries still, I think the dollar is a bull. But I think the dollar index, because when we had all these signals in, ironically, we also had a buy signal in the dollar index last Wednesday. And that pretty much came into the target zone yesterday. So we're pretty much at the lower part of a resistance band, if you will.
Yes.
And I think that that's going to start to contain. I mean, if Europe's going back online, we have states that are going back line. Obviously, we have a mixed bag of goods when it comes to economic numbers, and I don't think that any of those are going to be something that you really have to pay attention to for months, because they're going to be so out of line. You know, some things are going to be right and some things are being so skewed. But the interest rate component, I was looking at how gold fell off. Remember last week we were talking about how strong gold was holding up amongst the physical commodities,
yes,
any commodities. Well, then we have the interest rate component. Now, you know that my background is a 30-year bond, and I've been trading that since 1990. It was trading in the 80 handle back then. Now it's trading in the 180 handle.
Right.
You know, I mean, it's insane to think that the interest rates are going to stay at these levels. Now, the volatility just in the past couple of weeks, what's happened in the bond market and the 10-year market. Sorry about that.
That's all right.
You know, I mean, we haven't seen that kind of volatility even when we had the crash of '87, or even back in the flash crash. I mean, these levels are so extreme, and we're at the buffer point. I mean, a month and a half ago, I was telling my girlfriend, she was talking to her personal financial advisor about her bond funds, and I'm like, there's not much room left in these things.
Right.
You know, now if there was no room a month ago, and I think this is why the currencies are starting to consolidate in the major markets, because there's an ebb and flow. We have the interest rates, we have the gold market, we have the currency market, we have the equity markets, and these all have their little sine waves, and we've come to this point now. The interest rates can't move. That curve cannot move. Where is it going? It can't be lifted no matter how much the Fed supports it. It's just riding this curve here. Now we know where the equities are doing. They're obviously volatile, but the currencies, since the interest rate is a component of that, the currencies can't keep on doing what they did for a month. That was crazy volatility because of algos. Now, because the interest rates aren't moving, where are the currencies going? I mean,
well,
honestly,
it's so cool what you're saying. I mean, it seems that the currencies have kind of figured out that no one knows what's going to happen in the next 3 months. So they're going to, because that's how I feel personally. Do you know what I'm saying? It's like, okay,
yes,
we're trading the markets, but the reality, folks, is that, people ask me day and night, particularly in the real estate market around here, what do you think? Well, I says, well, something's going to happen. Do you know what I mean? If I told you that I know where it's going to go, well, that's insane, because I don't think anyone does. You know what I mean?
No.
But I think we'll have a much better idea in 2 or 3 months. That's what it really comes down to.
Absolutely.
Yeah.
But what between now and then, it's kind of like funny. Remember how years ago, especially like in the 80s and 90s, when Memorial Day, Labor Day, you're like, oh, here come the sleepy summertime markets.
Oh yeah.
We may enter sleepy summertime markets in May, and they may last for 4 months. You know.
Yeah.
It's remember September 11th. You know, I said.
Yeah.
Back then, and when that happened, the markets were moving, and then obviously for 3 years, it was a flat line everywhere.
Yep.
You know, now that was a different type of impact, you know, on the markets. You know, I don't think we're going to have a flat line, but I think that we do need this after the major shock wave. We do need a pause. It's because, I mean, who's trading out there? I mean, honestly, all your retail traders had to have gotten blown out in the futures and the FX markets, no matter what, in the past month and a half. If you didn't have deep pockets, if you had positions on, and you tried to trade that stuff with being inexperienced, how many people do you think really made money? And if they did, they were lucky enough to be on the right side, they're probably going to burn through it once it starts getting choppy over the next month and a half.
And
you know?
Yeah, and what you're hearing, folks, okay, so picture, even personally, Teddy, right? I mean, I love trading futures. I went from trading futures just to the triples because it didn't matter, folks, in this market here, whether you're bullish or bearish. There's no way that you can trade an S&P that's going up and down 50 points. It's impossible. I mean, so so I can see where that whole thing has gone. There's no doubt about it.
And the margin calls. I mean, honestly, how do you think the firms have handled the last month and a half? I mean, you know that. I mean, I told you months ago how I love this volatility, but I had to trade back less than half the size of what I was doing because margins, for one, were increasing. Not to mention this volatility, you know. But that comes from experience and being disciplined. And I'm not giving myself a pat on the back. I'm lucky that I followed that path, and that has helped me to weather the storm. I don't think that's the normal case for the average trader out there. You know.
No, because they haven't seen it, you know. If you've only seen it once, folks, you just I've said this a million times. You can teach people certain things, but you got to go through the cycles, man, because you can't believe it. You can't believe that something can go so high or something can go so low so quick. I mean, that's the reality, you know.
Well, we had oil at negative $40. How in the world is that? I don't even understand how there's not a circuit breaker at zero.
Listen. We got that question day and night on the network, man. There's no doubt, and it's the only one that does not have a limit. Period. And you know, so you're talking a whole different ball game. Yeah. If we go back to the bonds for a second, this whole bond thing's going to get interesting because we know that the Fed's buying the bonds, but yet they can't get to higher price. So that says quite a bit. Do you know what I mean? It's like, okay, you know, they...
Well, no entity can move a market altogether, no matter what. They can influence it short term, but they cannot drive the market. They can't corner a market, and you can't control the market. It just doesn't happen.
Yeah, that's a great quote, man, because it's so true. It's like insane, unbelievable.
I'm getting ready for the big short in the bonds, though.
Listen, I've been a bull in the bonds for about 10 years. I went south, not this Monday, about 7 days ago. Yeah, that's the...
See you next week, guys.
We'll see what happens, man. Cooking, brother, thank you so much, Teddy. Have a great one. Have a safe one.
Take care.
Stay right there, folks. Tommy and I come right back. Dow's up 385, Nasdaq's up 186, S&P's are up 46.